Hey, good morning, everybody. Happy Friday. How are you? Let's jump right into it. I know you see the title. We're going to look at that GameStop. We're going to look at that nearly 14 million in net call premium. We're going to take a look at that. Look at the chart. I know it was a close above 30. People were excited yesterday. Even saw GameStop at 31 in after hours yesterday and in pre-market. And that was all right up until this morning when Mr. President Trump posted to Truth Social about recommending a 50% straight tariff on the European Union starting June 1st. He posted that 6:43 Central Time. Right then, boom, SPY dropped down a point and a half and brought down some stocks. So we'll see how that reacts. We're about an hour away from the opening bell, but that was the initial drop there this morning. GameStop though was trading around 31.71 this morning in pre-market. Let's turn on that extended hour data so we can see it this morning. Yeah, 31.71 high after a 31.90 high yesterday. So that was shortly before that post. So we'll see how that actually plays out. But nice solid close for the GameStop. Good movement on volume yesterday. About 22 million shares, so pretty strong. Now there was some shares sold short on GameStop, so I would assume some shorts covered or bought some bought some shares, back. That's kind of a pretty large move, about a 10% move there on GameStop. And a nice close. I know we had talked about, anything above 29, 80, look for that 30, and we had that gamma level building, a few months ago back at the 27, 28, 29, and $30 level. And you're kind of seeing that actually play out. So let's take a look at that option flow. I know yesterday there was a little bit of misinformation there on the 40 and $50 calls for June. What actually happened was, we'll pull it up right now. The traders sold the $50 calls and bought the 40s. So what that is, I'll pull it up here. So you might have saw some people posting about, hey, they're loading, the $40 calls for June, which they were essentially on GameStop. However, basically the way they financed the buying of the $40 calls for June was selling the $50 calls. So we're going to pull that up here. If you take a look, if you're using like unusual whales, you're going to be able to see this type of data. We can see all of the real time option data and the flow in real time. So we're going to pull up that trade here, and we'll actually see here they bought the $40 calls, about 1.8 million worth, which was representative of 12,779 contracts, while selling 12,779 contracts of the $50 call. So they sold the 50s to buy the 40s, essentially all as a multi-leg transaction. That's also referred to as a call debit spread. So this essentially by selling the 50s and collecting the 1.12 million in premium, that helps me finance or buy then the $40 calls for the same expiry. So that's what you saw there, because there was a pretty good chunk there of some of that premium. And the way that would work here, if we can pull up the visualize this through a profit and loss calculator here, we'll pull that up, get it all dialed in here. Look at our profit and loss here. And we'll pull up the table. You see how that would actually work out in regard to the price. So basically, the price, you know, where it's at or moving up, and it's good, staying the same, moving down. You can see the change. Let me make sure that these are all entered accurately, because when you use the profit option, you want to make sure you've got them all set correctly. So we sold the $50 call. We buy the 40. I want to make sure the prices were right there, because the market's not open right now, so the data is not as accurate. Let me look at the mark here, and then quality sync that. But you get the gist of it. Selling the 50s to buy the 40s. That's what they did there. So let's look at some more of that option flow that went down as well yesterday on the GameStop. I know people were excited. I saw the sentiment; it was strong in that regard. We saw some more of those puts being sold, the in the money puts for January. Some 90s, some 55s, and then these 45s. So I don't know if there was a strategy running here on these 45s and 55s, but let's take a look at that. Let's see, they bought the 45 put for January 16th, which is still in the money, about 1,000 of them. But see, open interest declined yesterday, so might have bought some back. But let's see here. If we know using unusual whales, it's multi leg, so 99%. So more than likely, This trade was attached to the other one, which I believe was the 55. So let's take a look at that. And you can look at this real quickly with unusual whales to break down all of that data. Kind of makes it it's granular, so that's how you're able to break it down. So we're going to look at some of the size here, where you can see these are coming through at the ask, which is essentially bearish. However, like I said, it's a multi-leg, so we're going to look at the other side of this trade here, and let's see, it was as we expect or suspected. They're selling the $55 puts and buying the $45 puts. Essentially, that's a put credit spread. So we just did the call debit spread. This is kind of the inverse of that, and this is a put credit spread. So you sell these 55 puts to help finance the $45 puts. So, and that is via a strategy called a put credit spread. So if you want to know more about that, we can actually pull that up for you here. Put credit spread, you sell short a put and buy long a further OTM put. Basically, the idea here is the trader wants to speculate on a neutral to slightly increasing price with a neutral to slightly decreasing volatility. Can sell right a put credit spread. So looking for the volatility to kind of curb and price either stay the same or just a slight increase. And you can see these all types of strategies that are involved, with all kinds of trades, whether it be GameStop, it doesn't matter. There's complex option strategies and trades occurring all day on Wall Street for many different reasons, including hedging and those activities by institutions, buying and selling, etc. So those were some of the larger, because what I do sometimes see it's this top chain by volume, but I've got this sorted by like the largest impact to the actual option chain because I try to focus on where the bulk of the actual cash was spent on the options for GameStop. And the same scenario with more of those $90 puts for January as well. We saw 769. And about every day you see the volume, and then about half of that appears in new open interest. More than likely, market makers are assigning these. They're not just going to give you free premium out there, but like we shared in yesterday's video about using deep in the money puts, short sellers can use them. You could also use them to build like essentially a synthetic long position, and that you're going to, if you're assigned through the deep in the money put, you'll actually get your shares at a cheaper price than the current prevailing market price. And I talked about that during yesterday's video on X, so make sure you go check that out. That way you can get a little bit more, um, maybe a little bit more understanding, because I break down the math behind that as well a little deeper in yesterday's video. So make sure you go check that out. And also, all the videos are on YouTube, so if that makes it easier for you to find them, or based on the date or just the organization of them, you can do that as well. But like we talked about with the deep in the money puts, the gamma that created the pressure to 29 and 30 and breaking all that down, that data. Yes, so definitely go check that out. I think it would help in the understanding here of, how these deep in the money puts and why. Essentially, like for example here, if you look at that $90 strike, and you take the $90 and you see here the premium paid average price or sold minus 61.62 is actually 28.38. Well, the stock's trading at 30.28, so that's what I was saying. You can get the stock a little bit cheaper going through an deep in the money put like this, because essentially the math breaks out to 28.38 a share, which is cheaper than the current market price. So if you're like a synthetic long position, put arbitrage, put pricing inefficiency, many different reasons, but that's what's been going on with that. And let's take a look here also. The $30 calls, they showed up again for January. About 2 million in premium yesterday. 2,600 volume, about 425 increase, so a little bit of gain on the open interest there. I'm not sure if this was the same buyer here and the same seller into the close. It could have been. I try to look for matching candles, especially on an intraday trading where you get some volume but not a big change to the open interest. So some traders betting on this move to sustain, and they want to make some premium because, like I said, the net premium yesterday was 17 mil, but the net call premium about 14 million. So we'll take a look at that. And then the $30 calls for next week's expiry also saw a pretty decent amount of volume yesterday, 27,000 volume on those particular contracts, which represent about nearly 3 million shares, 2.7 million shares. And there's about 2.8 million premium, so pretty large day in that regard. But it was kind of split. You had some that were buying, some that were selling, and some part of mid A mid-fill, probably part of a multi-leg transaction. So yes, there were some buyers, there were some sellers. The cool thing about this particular contract, this one came through as an alert actually on unusual whales around $95. It was in the morning about 10:30 Central Time, as the volume on the contract had exceeded the current open interest, and those ended up rallying up to about 180. So almost a double, almost doubled there from the alert on unusual whales. So pretty exciting. As the volatility was still decent, but 82%. So spiked up and offered a little bit of premium there as GameStop continued advancing towards 30. So very, very exciting. So you saw it early in the morning, and then it came down just a little bit, 29 and some change, and then moved back up. And the net call premium stayed the same. It just kept moving and moving and moving. If you look historically, like yesterday, a net premium 17 mil, and then on Wednesday was 23. I mean, those are strong days. Wednesday and Thursday was strong days, and you're seeing the price action reflected based on those strong days. So if you look yesterday, or pardon me, on Wednesday, we had the 29, people getting excited. Premium was still decent though, because they were selling off all those puts. And then come Thursday, boom, here came the calls. So sell all the deep in the money puts, and then we buy all the out of the money calls the next day. It really put that kind of gamma pressure there on the stock. And let's see here, this in the money calls for the 25s for January. Saw those right before the close. About 1.5 million premium. Now you see about 1,500 volume, but the open interest decreased 200. Didn't see any change, even though those were bought. So somebody could have bought and got exercise, or bought and then exercised. I'm not sure why you would, only because there's still so much time left until January on those. Somebody could have bought them back because they sold some. Maybe the position got away from them. Because when you see like some back here where you see some selling and then some buying, if I sold these back here, maybe I got squeezed out and had to buy them back. Maybe I was, buying them, bought some here and then sold some off. So you never really do know 100% contracts trade hands. Because if you look over the last 45 days, for example, for this particular $25 call, you got equal amount of ask volume and bid, which just is assuming, kind of equal buying and selling of that particular contract. So let's see what else showed up. The 30s for June as well, because those are just slightly in the money, at the money. Yeah, see again, about 3 million in volume, or 3 million in total premium yesterday. 10,000 volume, and you'd like to see some change to open interest, but you don't. So contracts buying and selling, being scalped, trading hands, shifting from a new buyer to a new seller. But those moved yesterday. Those were about $200 at the open, and ran all the way up to 350. So not a bad rip there on those particular contracts. But let's break that down a little bit further here. I want to make sure we get you the view that you need here. So we'll sort that out by the highest premium here for yesterday. Make sure we got that accurate. Here we go. And we try to look for this highest premium over 500,000. Pretty large ones, yesterday, and then we had some option premium coming through. We said like we talked about, this is sorted here by highest premium to lowest. Here are your strikes. Here are your expiry. Here's the volume of those contracts. So if you want to pause or get a screenshot of this, so you got that data there. We covered the 90s. We talked about the 40s and the 50s for June. That spread. Let's look at these 30s that expire today, because there was about 3 million in option premium as well on that one. So yesterday that was huge. 62,000 volume on these $30 calls, and over 3 million in option premium. But the open interest actually went down 4,000. So there wasn't any big addition to the open interest. In fact, it went down because they're short dated. I assume traders took their profits, especially as those calls were. Let's see, they were $17 in the morning at the open yesterday and closed at 107. So $17 to $100, not bad. That's a pretty good rip on a short dated contract. So you're going to see buying and selling. I mean, they were even alerted on unusual whales at 55 early in the morning as the volume had exceeded open interest. So you could have doubled your money essentially based on that alert if you felt that the thesis and the data presented aligned with the idea of the upside, which it kind of was. The net premium was flying, the positive sentiment was up. There was some technicals on the chart. And yeah, I mean, people are buying load and call options. So yes, the risk to reward was there for the upside. Absolutely, it's been there. I've been posting videos about this stock for months, even when it was $21, just trying to tell everybody, hey, there's gamma out there in May and June. This thing moves up to 25, 26, 27. You'll see 30 in May or June, and you saw 31. So if you played it right and you caught in, and you bought, the May or June calls in April, like we talked about, you're absolutely banking and banked this week, and that's the whole point. So let's see what else we saw there. We covered the 30s for this week and next week because right there at the money. We covered the 45 and 55 put spread. We covered the 40 and 50 call spread for June. Let's look at these 35s also for June because those came through a little more out of the money now. About 1.7 mil in premium. Now you did see a little bit of gain in open interest, so a little bit more of the out of the money call building into that June expiry. So of that 10,000 roughly volume, 2,200 came over. So open interest did grow just a little bit, and those contracts did move. From about 125 in the morning up to 2:15 in the afternoon into the close. So a little bit of movement there. This particular trader might have added some of these right there just toward the end of the session. They may feel that the stock's going to continue advancing. So that might have been the reason for taking those particular trades. And then the $29 calls, which are in the money, saw those yesterday. I saw those also alerted on usual whales right there about 10 o'clock in the morning at 93 bucks. And we saw a high of 186 as those closed in the money. So again, nice trade. About 16,000 volume and 1.3 million premium, but not a lot of change to open interest. In fact, a decrease. So, and you see that short dated calls, people get in, they make their money, and they sell them in the same day, and then the calls trade hands. So, I'll let you look at what's actually there. I won't spend too much time on it. You can see what makes up the option flow. Whether it was leaning more towards the bid, which would be all red, or green, which would be more ask volume. You can kind of see how it was broke down in that regard based on the premium spent. But we covered where the bulk of that actual cash was spent. And you look at the chart, like I said yesterday, you had the 9 EMA at 28.64, your 9-day moving average, and the low on the stock was 28.49. So kind of bounced right there on its 9 EMA. Nice strong close, and then with the Trump tariff post this morning, stocks trading at 30.37, still above 30. So we'll see how it goes in regards to the rest of the day, when the market opens, when the option market opens. I'll take a look at that here. I'm going to pull back up that gamma so you can take a look at it on the GameStop as we wrap up here. And that's what I referred to. See, yeah, now yesterday I think it was around 19 or 20 mil gamma per 1% price change, and now it's 26 million, and net gamma exposure about 3 million shares. Because now all of the $30 calls that existed in open interest are in the money, and you have 31s that are almost at the money and in the money, but you have that gamma a little bit higher, 31, 32, and 33 that's built out there. So basically, what this means is for every 1% change in price, the market makers need to hedge. So if it's green, it's long gamma. If it's red, it's short gamma. So essentially, here, as price moves up, more of these calls go in the money. Market makers need to hedge against those positions, continually, buying or selling the stock, etc. So when they're squeezed to the upside for gamma, they buy more stock, creates that kind of upside pressure. And then if it's negative value, it's short gamma. Then as they sell off the calls, they'll also sell off the shares that they use to hedge, which kind of brings the price, creates that downside pressure on the stock. So, but when you actually look at the gamma on GameStop, like I've been talking about, the highest was at 30. And I've been saying it, if we get to 26, 27, that thing gets up to 28, 29, or 30, closes around 30. I mean, you got a lot of calls that quickly go in the money and the stock gets a little volatile and the price moves up. And that's exactly what happened. I like seeing it because we talked about it ahead of it, not as after it's happening, but we talked about it happening before it happened, the reasoning, the why, the strategy, things that you could use and trade to get set up for the moves you saw. You saw this same type of scenario play out last year So hopefully you're able to learn from that and make a few bucks. And based on the posts on X and the people that have reached out to me, you guys have been cleaning up because I can see your posts. I saw the gains. Highest net gamma again today for the short term expiry, but also built into next week and then for the June expiry and starting to see some into the July. These May and June expiries were starting to get built out in February and March, and I've been posting about it every day. We put daily videos out every day just to try to get you, some alpha, some information you can trade off of, make some cash. That's the whole point of this: is to make more money, to lose less money, to learn a little bit more, and that's why I drop these videos every single day. So shout out to everybody that's visiting the YouTube channel and watching the videos. Do appreciate the support over there, and everybody that's watching the videos on X. I see your replies. I see your messages. You tell me that you appreciate the videos. They help you. Help you with education or understanding. And that just makes me feel great because that's the best part about all of this. It's kind of that reach one, teaching others how to fish. So some pretty good, net call premium yesterday on the stock. We saw, like I said, more of those in the money puts being sold. And if we look at the actual day yesterday, let me turn on a shorter time frame so we can see how that played out yesterday. But just what a day. It was off to the races. And then boom, just kind of like that cup and handle kind of formed, and then a breakout for a higher high. Really exciting to see that. And then if we look at pre-market right now, time of filming, ahead of the open, down a little bit. Like I said, President Trump posted about tariff headlines, and the algorithm in the market's been very sensitive to those headlines. So we'll see how the rest of it plays out with the open in that regard. Let's see here. Just going to pull up one other thing here. Volatility. Volatility by open interest. Yeah, I was trying to find something here. I was going to look at real quick that IV, just kind of where it's been in relationship to the stock, and then the rank moving up there. Okay, okay. Where's that at here? Yeah, I know there's a lot of stuff. I know. Yeah, I'll have to probably find that in my next video because I was working on building some of the. Because if you have the API access on Unusual Whales, you can build custom features. So some things that we're gonna work on, maybe we'll just cover that in another video here because I thought I had it say saved here, but I didn't. So not the change I made, but what I was actually looking for. So we'll just come back to that. But yeah, we'll continue watching the premium. We'll continue watching the flow. We'll continue to watch, if any news or any filings or anything like that comes out from GameStop. So yeah, very interesting though to see, just some of the options that were being traded, like the highest volume. Don't necessarily get caught up in that. Like I said, I saw a lot of people like, oh, a lot of volume on the $30 calls. It's because they went in the money at the money, 62,000 volume, but none of that came over a new open interest. A lot of that just shifted and traded hands yesterday. So always be careful with short dated contracts, especially when they're out of the money or shift right at the money or out of the money, and when that IV is spiked. So yes, you can make more money, but it can also get very scary very quickly. So, but yeah, that's what I got for you today. It's a holiday weekend. Don't forget, market is closed Monday. Makes that a short week next week. So I hope everybody has a fabulous weekend with their family. Remember what it's all about. Enjoy that time away and a nice little reset. And I hope you enjoy the rest of your day and the video. If you have any questions, you can always reply or send me a message. Either way, I'll get back to you. And yeah, happy Friday to everybody. Have a great day.